All right, hello everybody. Welcome to this week's growth call. My name is Steve Jane. Looks like we've got Christoph and Manfred on the line as well. Hello guys. We hold these growth calls every week to discuss how Bisq Network has been doing and what we can do to further its growth even more. If you're new to Bisq, we like to think of Bisq as the only true decentralized Bitcoin exchange where you can trade Bitcoin for fiat currencies or other cryptocurrencies with a very high degree of privacy and security. For this call, if you're watching on YouTube, I put the link to the Hangout in the YouTube chat if you'd like to join us here. Otherwise, feel free to put your comments and questions in the YouTube chat and we'll answer them as we can. As for the agenda for today, it's probably going to be pretty short. There are 3 points we want to cover. One, we want to just do a quick market update and call for strategies on growing new markets. And then number 2, talk about DAO testing. It's going to be the big item for today. The DAO is slated to launch, we're hoping, the 15th of April. So this testing cycle that's going to be starting later today in a few hours is hopefully going to be the last one, which means we want to make it as good as possible. So we want to really emphasize that and make sure that you know what to do if you're interested in helping us test. And the third thing is the new Monero proposal that Manfred made yesterday. Discuss that a little bit as it is very interesting. So for the market update, Christoph, would you like to take it from there?
Yeah, sure. Yeah, I can make it super short. Yeah, we're just 4 days in the month, and yeah, compared to last month, it looks quite promising. So we do see 20% up in the average daily trades. So that's a good sign, and also I think it's around 7% increase on the US dollar volume. But of course, that's mainly based on the rising Bitcoin price. The Bitcoin volume is a little bit down, but yeah, as the trades are picking up, and today we have a really great day on the Bisq network. Yeah, let's see. I'm quite positive on this month. I think maybe we'll have a good upwards curve for the DAO launch. Yeah, so that's from the market update.
Awesome. Yeah, liquidity is very important for the DAO to work, so we have to make sure that we keep it up. I do want to just say quickly that we have been devoting our resources more toward the DAO in the past couple of months and haven't focused too much on growth. Of course, once the DAO launches, that's going to change. And I guess once those resources free up to spend more time and more focus on the DAO, I think we're going to want to make sure that we have a good strategy for growing in new markets and existing markets as well. So I just want to make a call here for anybody on the call who has ideas or strategies in mind to do that. Monero is the big altcoin market, and then of course the euro, the US dollar. New markets wise, I think the Canadian dollar, Brazil, and Mexico are looking very promising. So for anybody who has ideas, I think it'd be great if we could discuss them and strategize over the next few days, so that once the DAO launches, we can just hit the ground running and just really try to get some activity on in these markets. So yeah, feel free to post comments in the YouTube chat or approach us afterward on Slack or the forum, and I'd love to hear from you. As for the next item, DAO testing. So as I mentioned, DAO is hopefully launching on the 15th of April. It's coming up quick. This is hopefully going to be the last DAO testing cycle that's starting today. So if you've done it before, if you've helped us test a DAO before, it's really the same thing. The only difference is that we are on a different testing network right now. So you will need to ask for new BTC and BSQ for testing. So just reach out on Slack and we'll send you some. If you're new to testing, we have a couple of resources. We have some written resources as well as a video that will help walk you through the process. It's very quick and easy. So don't be intimidated. The goal this time is to get as many proposals from as many people as possible. So, you know, we would like to have 30, for example, 30 proposals from 30 people as opposed to 10 proposals from 3 people. We just want as many people as possible. So anyone who can test is a big help. So yeah, anything else to add to that I'm missing?
Another small change with this round now compared to the old testnet is that the phases are shorter.
Oh,
so now there are proposal phase and then the blind vote phase, and the vote reveal phase is always 1 day. The whole cycle is only 3 days. So it depends a little bit how testing develops. Basically, we have the plan to go on with testing until the launch, shortly until the launch. But of course, the earlier, the more testers we get, and the earlier we find the remaining bugs, so the better it is. So yeah, you're really very welcome to help us there to get the DAO ready.
Yeah, and I also think it would be great if people can also not only try out the governance part of the Bisq DAO, but also try out some trading, put out some offers to sell or to buy BSQ, and pay trading fees with BSQ, with Bitcoin, just to get a feeling, and also to see if we have missed some essential user feedback during the trade, so everyone understands how you can switch between paying trading fees with Bitcoin, with BSQ, and yeah, that everything is good to go for the DAO launch as well on the trading side.
Yeah, it's very important. Actually, I forgot that the phases are shorter, and I'll be sending out reminders on the DAO channel on Slack to make sure that people remember when to vote, when to leave the client on for the vote reveal and things like that. So if you're not on the DAO channel on Slack already, please join. It'll help you stay in touch and current with what's going on with DAO testing. And that's all I have to say for testing. I guess we can move on to the new Monero proposal. Would you like to discuss that, Manfred?
Yes. Yeah, I mean, we got repeatedly always this request if it's possible to make Monero as base currency so that people can trade Monero directly with fiat currencies on Bisq. Unfortunately, that's not a walk in the park at all. We discussed it with experienced Monero developer, and he confirmed that basically that it's a huge effort. The multisig on Monero is more complicated, like the one on Bitcoin. You need to implement the whole wallet part and everything. There is no light wallet, so that's another usability challenge, that you need to run the full Monero node in the background and so on. So just, yeah, rough estimation is minimum half year to up to a year development effort of 1 or 2 experienced developers who are both experienced on the Monero and on the Java side and Bisq side. So that's not feasible for the foreseeable future. And I was wondering if we could find some other alternative. And we have already one proposal for an off-chain trade protocol, which is based on BSQ bonding. I don't want to get into details of this, but it's quite similar. The basic idea is that you decouple the security part, which is at the moment, a central security element is the multisig. And at the moment, the trade amount what the Bitcoin seller is selling is part of the security of this multisig transaction, of this deposit transaction. And the idea is to separate the security completely from the transfer of the assets. And this makes the transfer of the asset independent from Bitcoin or for any blockchain. You can literally change oranges to apples. It doesn't matter how you transfer the funds. The only thing what you need to have is some verifiable proof of that you have done the transfer when it comes to a dispute. And in the case of a Monero to a dollar trade, for instance, on the Monero side, it's very easy because the Monero sender can provide a cryptographically verifiable proof with this transaction proofs, what we're using already. On the fiat side, it's basically the same like now. It's not perfect, but it works good enough. Also, the sender with page signer, he can also deliver a cryptographic proof of his bank transfer. And the idea is here that both traders are doing their transfer of the asset, in one case Monero, on the other side fiat, or as said, it could be really apples and oranges. Not this Trumpian oranges, the real oranges, the fruits. Yeah, you can make this trade completely off-chain and independent of the Bitcoin blockchain and any other. Of course, it can be another altcoin, and it can be even Bitcoin on the other side, but it's independent of the security mechanism of the trade protocol. And the security mechanism of the trade protocol is covered by a symmetric security deposit, which is bigger than the trade amount, the equivalent of the trade amount. So when you trade Monero worth of 1 Bitcoin, let's say Monero is $50 one Monero, then I think it's 100 Monero is then roughly 1 Bitcoin with $5,000. So when one peer is selling 100 Monero and the other peer is paying for this with $5,000, both have to lock up a security deposit of more than 1 Bitcoin, let's say 1.1 Bitcoin, to have some extra security deposit to incentivize the traders that they will follow the trade protocol. And when one trader will breach the contract, then it goes to the dispute with the arbitrator. And when the arbitrator finds out that one has violated the trade protocol, he will lose his security deposit, and the other trader will receive then this. So in case that the fiat sender didn't send the dollar to the Monero seller, then the Monero receives his Bitcoin, and it was actually a Monero to Bitcoin trade for him, but at least he has not lost money. Get a little bit more because the 0.1 Bitcoin on extra security deposit, which can be variable and maybe user defined, like it is now with the buyer security deposit, it should basically reflect a little bit of volatility to cover volatility changes during the trade execution time, and as well gives enough incentive that the one who has received already the money, that he has still the incentive to do his normal payment and not prefers to just lose the Bitcoin, because at the end it would be then a null sum for him. As when the fiat sender has received the Monero and he has put in 1 Bitcoin exactly, and let's say all is exactly 1 Bitcoin, then for him it's fine. When maybe he decided and prefer to get the Bitcoin instead of the to pay the Monero with Bitcoin instead with dollar, like it was agreed. And for him it's he doesn't have a loss. He has just changed the currency with what he has paid at the end, but with this extra 0.1 Bitcoin or even more, he has an actual loss, and then it's economically not rational for him to not follow the trade protocol. There are 2 or maybe 3 problems with this. A small problem is that basically there is a small incentive that you pay late, because you have a little bit more chance, or there's an incentive that you wait until you receive the payment from the other peer and then you start the payment, but that can be mitigated. One way is that we don't show the user when he receives the data from the other peer. So everybody basically has to be the first from the UI who make the payment, and combined with the requirement that they have to send, like the Monero sender, he need to send the other peer the transaction ID and payment proof. So he cannot cheat, basically, that he clicks the button, I have sent the funds, because he doesn't know the transaction ID and the payment proof before he's really done the payment. With altcoin, it works the same. Like with a transaction ID, with fiat, it doesn't work so perfectly, but with a screenshot from your bank transfer, I think we could get also quite a lot of protections. I think that's not a big problem. That's solvable. And the other 2 problems, another problem, which is maybe also not so big, is that there is more risk for the arbitrator, because the amount in the escrow is the double. It's from both sides. For 1 Bitcoin trade, then you have 2 Bitcoin locked up. So when the arbitrator gets hacked, or when the arbitrator is corrupt and run away with the money, it adds more risk to the arbitration system. On the one side, we want to get away from the arbitration system anyway. So this could work the same way like the plans what we have with the new trade protocol, where we want to fade out the arbitration system and replace it by this feature with the Bisq DAO. That could be applied to this idea in the same way. And yeah, and it just increases the risk. So it's not a benefit, but it's not a terrible problem. The biggest problem, probably what I'm not very sure, is if people are really willing to lock up so much money. When they do, especially the professional traders, they're very sensitive how much money they have locked, because they cannot use this for other trades and so. And of course, we also want to work on accelerating and automating the trade process, also with the API, which will be launched after the DAO, and with other improvements, especially for Monero trades, where we integrate some features with the transaction verification. And so we will probably go to the direction that the whole trade can be automated and can become much faster like it is now. But it's still a considerable time where the funds get locked up, and I'm not very sure if people are really willing to lock up the funds. Another thing is a little bit with privacy. With fiat, privacy is limited to the bank payment methods. So basically, your other trading peer knows your name and your bank account. Monero traders are usually not very happy with revealing their privacy, so that's not a very good match. So I'm not sure if there's really a big market for users who would like to exchange Monero to fiat in Bisq. And Monero to other altcoins, I think there is a small market. I think there are not too many people who want to exchange Monero to Dash or other altcoins. So I think the main market in Monero is to Bitcoin or to fiat, but then I'm not sure how big this market for the fiat side is really for Bisq. And when it at the end turns out that only 5% or so of those trades are fiat trades and the rest is just normal Bitcoin to Monero trades again, then we have not gained anything. It's just a lot of effort to implement this. So that's a little bit my reservations. I still have the feeling that this direction to separate the security part completely from the transfer part, that this is very promising and important to go in the future. Also with the new trade protocol, we want to design it technically in the way, even if it's merged together, because in our current trade protocol, the transfer of the Bitcoin is part of the security deposit and mixed together with the security deposits for the buyer and the seller. But conceptually, we can separate it more, so that it become easier when we develop in future off-chain trade protocol where the transfer of the assets is done off-chain. It can be, of course, on-chain, but it's not mandatory on-chain anymore. And only the security part is on-chain, either like with this proposal in a Bitcoin multisig, where the both traders are the key holders and the arbitrator when the arbitrator is used, or we go directly to this other proposal where we're using BSQ bonds and doing this security deposit in BSQ, which has the benefit that you can leave it and you can reuse it. So you don't have to set up with every trade a new security bond, and you don't need to make a new transaction, because that's another problem that we assume that transaction fees will become a problem at some point. And to have on-chain trades where you're required to make the transaction on-chain, even if it's just 2 transactions, what's the minimum for such a multisig protocol, it can become already too much friction for, at least for smaller trades. And with the BSQ bond version, it's a little bit similar like with Lightning. When you open a channel, you put some money in and then you can use it to a certain limit, and you can leave it open for 1 year or 2 years or 5 years, doesn't matter. And here's the same. So you just make one time a bond with BSQ, you put in whatever you want, 5,000 BSQ, and then you can trade in parallel up to this amount. And when one trade has completed, it get freed up again, this amount which was taken from the security deposit. So probably that's causes at least less requirements to lock in a lot of money during the trade, and also causes less costs on transactions.
Manfred, compared to the new proposal, the BSQ bond, so in the new proposal, what's the advantage then? Also just that the traders are able to pay it with Bitcoin, and the arbitration system is included?
It's basically, I mean, the advantage is in a way that you don't need another currency, as you can stay with Bitcoin, which is already part of Bisq and so on. And we are not, also with the other proposal with using BSQ bonds, one concern is that we are adding external risks to the BSQ system, especially when the amount what's locked up in such trades become bigger and bigger in relation of the market capitalization of BSQ. It changes the game theoretical structure of BSQ and the DAO, and it could become dangerous that it adds new attack vectors to the DAO, which are not considered yet because these cases don't exist, and I'm not sure if it's a good idea to mix it, but that requires more study and thinking if there is a big risk. And I think it would become only a risk when the amount which are locked in for trading will become really big, that something like $10 million are locked in BSQ for trading, and their market cap of BSQ is only $10 million, then I think it's problematic. When the difference is very very large, that the market cap of BSQ is 100 million and maybe 5 million is locked in for trading, I don't think that it's a big risk, but I think it requires more thinking and study, and it, of course, it depends on the DAO and the BSQ, so we cannot start with this until the DAO is not really stable and well tested and out, and but at the end, I mean, I think the model with BSQ has more advantages, especially because you don't need to lock up so much funds, or you don't need to do this transaction all the time. Also from the privacy perspective, with every Bitcoin transaction, theoretically you can lose privacy when you don't care about your the way how you're using then your Bitcoins. An interesting side effect could be that such a symmetric deposit and payout transaction, where the inputs and the outputs are exactly the same for both, they have some coin join properties in a way, but I would be careful to interpret it really as coin join, or that to assume that you get really privacy like in coin join, because the main problem will be then the coin merge. And even if you take care that the coins what you get out are not merged with some other coins which have been connected with one of your inputs, so chain analysis could derive the information that you are probably the same owner. When your other peer is losing privacy because he didn't care, then you are revealed as well, because there are only two peers. So when they know, okay, input one is connected with output one, then they know input 2 was output 2. So, and that's that's weakening this properties a lot. So I would not put too much expectation into this. I think that would require then really a very good wallet management, where coin join is avoided completely, and that's probably nearly impossible, because comes to usability problems when you want to spend, when you have in total 3 Bitcoin in your wallet, but because you would lose privacy when you merge this, maybe that's 3 different UTXOs with 1 Bitcoin, and you need to make a bigger payment with 3 Bitcoin. At the end, you need to merge it, and and then you're losing your privacy. So it's a difficult trade-off, and I'm not sure if there are good solutions at the end. Coins like Monero are the best solution for privacy. And Bitcoin, unfortunately, it's still a pain in the ass.
Yeah, thanks, Manfred.
That sounds really cool. I guess we'll find out what demand is like over time. But I'm just curious: are there any other services that allow like Monero to fiat in a somewhat private peer-to-peer way?
I think there's this local Monero, basically like local Bitcoin. I don't know anything basically about it. I just assume either it's very small and they don't do KYC, and when it will become big, then it happens the same like with local Bitcoin and Shapeshift and so on. So I think it's a centralized company probably, or I mean, I just heard that this XMR2, they locked out US clients because probably of regulatory pressure and so on. So it's foreseeable that any centralized service will go the same route like Shapeshift and local Bitcoin. It's just, yeah, as long as they are small, they can afford it to say that they don't do KYC and are private, but as soon they become more relevant, yeah, they are under pressure. So I think that's, I mean, yeah, for Monero users who think a little bit more long-term, I think they should be aware that Bisq is really essential. Because I think I don't know another exchange. And also, I mean, the same, at the moment, probably there are quite a few altcoin exchanges where you can trade anonymously somewhere in Asia. So, but it's just a question of time. I mean, they get regulated the same way, and it's on the agenda of all of the big countries, and smaller countries will follow after a while. It just takes a little bit more time. So I think for a radical cryptocurrencies like Monero, which really protects users' privacy, I think it's really essential that they are aware that they need also a decentralized exchange which is censorship resistant. Otherwise, it will get attacked on the exchange level. And when suddenly nobody can trade Monero anymore, then you can imagine what happens with the Monero price. And unfortunately, especially with Monero, it happened already with many exchanges. I think in Japan, it's completely forbidden. And it's at least, yeah, the regulators usually don't like a lot a cryptocurrency, which is really private. So I think there should be some incentives for Monero users and traders to be aware that Bisq needs Monero for getting more trade volume and to make it economically sustainable, and Monero needs Bisq when time comes and they get more under pressure from the regulatory side with exchanges.
Yeah, definitely. It makes a lot of sense. All right. Well, would anybody like to add anything? Let me take a quick look at the YouTube chat. Yeah, it looks like not too much activity there.
The only thing I want to point out is, so if you have contributed to Bisq in the past, and so you have earned some BSQ, don't forget to vote. We have our last voting round with our Google spreadsheet. It will be online until end of tomorrow, end of Friday. So yeah, if you want to participate in the voting, please do it until tomorrow. Yeah, it will be the last one outside of the Bisq client, which is quite exciting. Because I don't have.
Yeah, and remember, yeah, go ahead.
Because I don't have to copy over all the conversation requests back and forth, check back and forth everything, so nothing is broken. Yeah, so I'm really glad that the Bisq DAO is live soon.
Yeah, I'm sure that's not a fun job. And remember, when you vote, it's blind voting, so you have to make sure you cover your eyes.
And you're not allowed to look at the BSQ addresses and copy paste them into the GitHub issues and search for the identity of the user, so you can blame him afterwards. Hey, you didn't vote for my compensation request. Yeah, all stuff that is a thing of the past soon, unfortunately, or luckily.
Yep. All right. Well, if no other questions, thanks everybody for joining, and we'll see you next week.
See you. Bye.
Okay.
Bye-bye.
See you. Bye-bye.